Assalamualaikum and hi to Madam Farahia and friends. Today we are from Group 3 would like to present about Securities Commission and Capital Markets. So, this is Group 3 members. There are 9 members of all. So, in Securities Commission, we will talk about the detail of Securities Commission, function, responsibilities, principle and standards.
I will start about of SC. The Securities Commission Malaysia (SC) was established on 1 March 1993 under the Securities Commission Act 1993 SCA. They are a self-funded statutory body entrusted with the responsibility to regulate and develop the Malaysian capital market. The mission of SC to promote and maintain fair, efficient, secure and transparent securities and derivative market, and they facilitate the orderly development of an innovative and competitive capital market. The SC has direct responsibility for rulemaking, enforcing regulation pertaining to the capital market, ensuring sustainable market growth and development, supervising capital market activities and market institutions including the exchange, clearinghouses and registered market operators, and regulating all entities and persons under the Capital Market and Service 2007. Based on the SCA, the SC reports to the Minister of Finance and their accounts are tabled in Parliament annually.
I'm going to present about the functions of Security Commissions Malaysia. The first one is regulating the takeover and mergers of companies. Next, regulating all matters relating to unit trust schemes. For example, all matters relating to the capital market. The third one is licensing and supervising all licensed persons who promote and maintain the integrity of all licensed, registered, approved persons and participants in the capital market. The fourth one is encouraging self-regulations. This means to encourage and promote self-regulations by professional associations or market institutions in the capital market. The next one is supervising exchanges, clearinghouses and central depositories. The last one is ensuring proper conduct of market institutions and licensed persons.
Today, I want to present the responsibilities of Securities Commission Malaysia 1993. Among of the responsibility which is developing the overall capital market and it is market segment such as the equity market, bond and sukuk market, Islamic capital market, fund management, derivatives and other market-based platform and services. The second responsibility is facilitating innovation and digital services through the capital market. And another their responsibility is ensuring proper conduct of all market participants through our supervisory, surveillance and informal work. The next responsibility of SC is creating avenues for a sustainable financing ecosystem and championing good corporate governance practices. Lastly, is the responsibility of SC is facilitating greater cross-border regulatory cooperation and youth leadership.
Next, I will continue with Principle and Standard of Securities Commission. Principle 1 is Ethics and Integrity. SC promotes and enforces a culture of integrity and compliance that reflect their mission and vision. All SC staff shall act in an honest and ethical manner when dealing with each other, business stakeholders in order to promote trust and confidence. Principle 2 is about transparency and disclosure. The SC operates with a high degree of transparency in all aspects of its business activities, which they providing the market with relevant information at their website. Principle 3, adherence to client charters. SC has implemented various initiatives to increase process efficiency and shorten time to market because to make it easier for the stakeholders to do business. Principle 4, maintaining confidentiality, which to make the stakeholder entrust them. Principle 5 is providing a safe environment and workplace for the staff. The SC manage its business in ways that are sensitive to environment, which they recognize that health and safety are a matter of the top priority. Principle 6 is about the environmental and social responsibilities. Besides serving as a responsible regulator, SC policies and practices with respect to corporate social responsibilities and sustainable development continue to develop and evolve. Lastly, Principle 7 is about the SC's expectation of the people with whom SC does business. They expect that business people comply with relevant laws and demonstrate the ability to meet SC's requirements in terms of standard, quality and reliability. Next, we will move to the Capital Markets and Financial Services Act 2015. In this section, we will talk about the definition, importance of capital market, how does a capital market work, types of capital market, and roles of capital market.
Next, I would like to explain about the definition of Capital Markets and Services Act 2015. Capital Markets Act 2015 establishes capital market infrastructure, provision and issue licenses to market intermediaries and regulates issuance of securities, bonds and derivatives to the public. Moreover, capital markets are financial markets that bring buyers and sellers together to trade stocks, bonds, currencies, and other financial assets. Capital markets include the stock market and the bond market. They help people with ideas become entrepreneurs and help small business grow into big companies.
I will continue with the importance of capital market. Capital markets are important for the economy, investor and businesses. First, they can facilitate the process of capital formation for economic growth. Second, enable businesses to access their capital they need to expand their operation and invest in new technology. Third, they allow investors to diversify their portfolio and reduce their exposure to any single or sector. This can help manage risk and lead to stable investment returns. 4. Businesses can raise funds by issuing shares or bonds in the capital market for various purposes such as expanding their operation, investing in new technology, or acquiring other businesses.
Continue with how does a capital market work. Capital market function to the process of issuing new securities in the primary market and trading existing securities in the secondary market. First, primary market. The primary market is where newly issued securities are sold for the first time. Companies issue securities such as stock, bond and other financial instruments in order to raise capital. Investment bank act as underwriter in the process of issuing security. They purchase security from the insurance company at discounted price and then sell them to investors for the higher price. The underwriter's role is to assess the risk of the insurance company and determine the appropriate price at which the security should be sold to investor. They will then market the securities to investors, who can be individual, institution or other organization. Once the securities are sold to investor, they are considered in the secondary market. Next, secondary market. The secondary market is where securities are traded between investors. This includes both public exchanges such as New York Stock Exchange (NYSE) and over-the-counter (OTC) market. In the secondary market, investors can buy or sell securities they already own. The price of securities in the secondary market is determined by supply and demand.
I will continue the presentation by presenting the types of capital markets. The table below shows several types of capital markets, each with its unique characteristics and features. The most common types include equities, bonds, commodities, and currencies. Understanding the different types of capital markets and the financial instruments traded in each market is essential for investors, companies, and other market participants to make informed investment decisions and manage their financial risk effectively. Firstly, equity markets. Markets where shares of ownership in companies are bought and sold. Next, bond markets where debt securities such as corporate bonds, municipal bonds, and government bonds are bought and sold. Thirdly, commodities markets. Markets where commodities such as gold, oil, and wheat are traded. Then, currency markets where currencies are traded. After that, real estate markets where properties are bought and sold. Lastly, is derivative markets where financial instruments derive their value from underlying assets or securities that are traded.
I would like to continue this presentation, which is role of capital market in the economy. The first one is capital formation. Capital market facilitate the process of capital formation by providing a means for companies and other organizations to raise capital through the issuance of stock and bond. Second one is allocation of resources, which is capital market help allocate resources efficiently by directing capital to its most productive uses. Next is risk management, which is capital market help manage risk for investors and businesses by providing a means to diversify their portfolios. Investors can allocate their capital across a range of assets which help reduce their exposure to any one assets or market. The last one is economic growth, which is capital market promote economic growth by facilitating the flow of capital to its most productive uses.
So, that's all from us. If there are any question, feel free to ask us. Thank you.